Hello, this is a quick overview of our project Impact Markets. We are GoodX. I'm Don and my co-founders are Matt and Dani. And you can find out more about Impact Markets at impactmarkets.io. We also have a Substack, that's impactmarkets.substack.io. And we have a Discord where most of our discussions happen. And you can find an invite link to our Discord on our website, impactmarkets.io. So what is an impact market? An impact market is best described, in my view, as basically a fancy prize contest. There is a philanthropic funder who wants to see solutions to some problem or contributions to eventually solving some problem. These problems can be broader, they can be more specific, and this philanthropic funder then says, here is, for example, $1 million for anyone who makes a significant contribution to this problem. And that basically reverses the flow of money compared to traditional grant making, where in traditional grant making, first researchers would submit proposals for stuff they want to research. Then the funder looks through all of these proposals and then selects the ones that the funder wants to award grant money to. Then these researchers go off, the ones that have received their grant money, go off and implement their project. And then like some 10% or so of them, let's say, succeed with that. But by and large, the funder's work has been done at that point. With impact markets, that flow is reversed, as I mentioned. And the funder only really becomes active in the end and reviews those last 10% of projects that were successful. Now, what the issuers then have to do, and in our case, like issuers are typically researchers, and we call them issuers because they're the ones that issue the impact certificate, which is like the contract that guides the ownership of this reward that the funders pay out. These issuers then seek seed investments, so they sell off or they offer to sell off some shares in their impact certificate to seed investors. And then they use that money to realize the project. And in the end, the funder offers, pays out the reward in the sense that they offer to buy back some of the shares in this impact certificate. Now, these profit-oriented investors that the issuers seek out can be any kind of profit-oriented investors. They can be the somewhat richer flatmate of a researcher who has like lots of private knowledge about that person. They can be another student or a professor or some employee at some university that they're at, who might not know them very well, but might understand the general topical area a whole lot. They could be like any random business angel. They could be like venture capital firms. They could also be impact investors. And these people then put some money into this project in return for shares in the impact certificate. And in the end, if they are right, if they succeed, then they can make a profit and expectation from this. So as a general schematic, at first there's just the project that the researchers and the investors contribute to, either with their time or with their money. Then with like a 10% chance, this project is successful, and this is only the time when the funder becomes active. So the funder is like, at first just makes the announcement and doesn't interact with this project at all. And only in the end, if the project is successful, the funder becomes active and rewards this project for the successful contribution that it has made. And now some monetary flow goes to the researcher and some to the investor. And that just takes the shape, as I said, of an offer that the funder makes to them to buy shares in this impact certificate. So the researcher and the investor are free to also refuse this offer and to keep the impact certificates for some future funder that might offer a better price. So why would you do this? We think that it'll make it much easier for researchers around the world to get access to funding and to infrastructure. Currently, there are this handful of EA funders that can give out some funding. But at the same time, there is already a worldwide, an international, let's say, network of for-profit funders and of impact investors to some extent. Vastly more of them than there are EA funders. And so for people, especially researchers that live a bit further outside bigger EA hubs, it is thus much more likely that they are relatively close to someone with a bit of money and a profit incentive than that they are relatively close to an EA funder. Conversely, for EA funders, this means that they can draw on this vast international network of for-profit investors in order to find funding opportunities. They basically leverage all these for-profit investors to find excellent funding opportunities, and then they only reward the successful ones, so that also cuts down on their time cost by maybe a factor of 10, which further aids them in scaling up their grant-making operation. Now, for investors, this is useful because, first of all, obviously they can generate a profit and expectation if they play their cards right. And secondly, for impact investors, it's particularly interesting because lots of impact investors are limited in terms of how impactful the projects are that they can invest into, because very few projects are highly impactful and at the same time profitable, so that as soon as they limit the scope, the scope of their investments to only projects that are profitable and that are not non-profits, for example, they also limit the impact of the projects they're investing into a whole lot. With impact markets, they can invest into some of the almost most impactful projects, and so they don't have this limitation. So what challenges are we running into? First of all, it's important to us to measure the counterfactually valid impact that we are generating. So it could be that researchers would do things anyway and then just submit them to an impact market, to a prize contest that runs on an impact market in order to get a bit of extra funding. That's not terrible, but that means that this funding could have been used better to incentivize work that would not otherwise have been, or enable work that would not otherwise have been done. We want to, there are a few other failure modes for this, and we want to address this failure mode and other failure modes through qualitative surveys and also, if possible, some quantitative experiments, and thus establish how great the counterfactually valid impact of impact markets is over traditional funding sources. Another way to establish this is through a focus on non-trivial projects, by which I mean projects that are large enough that an individual researcher is unlikely to have been able or willing to realize this project all on their own. That means that this researcher needs to attract seed funding, which means that the researcher will sell off some shares in their impact certificate at a relatively cheap price to the seed funder in order to receive the seed funding. And they would not do that if they were able to realize the project themselves, because in that case they could sell the same shares with the same probability to the retro funder directly, who pays out a higher price for the shares. So that also establishes, when it happens, that this project is likely to be counterfactual to a large extent. Then we want to address potential abuse of the platform. So we want to give us the option to ban people from the platform, which means that we need to KYC them, which stands for Know Your Customer. We have a curation team that looks through all the people that submit things to the platform and all of the individual impact certificates that they submit, and then decides whether these impact certificates are safe enough that they can get published. And if people abuse the system, then we are also able to ban these people from the platform because we know who they are. We also want to aid this curation team through certain shorting and auditing mechanisms, at first through expose certificates, as we call them. So a way where we, as the marketplace, incentivize people to write exposés of overly risky certificates, which the curation team can then remove from the marketplace. And that is also a way that we are hoping to spot impact certificates that slip through the curation process. Finally, we want to establish norms on the marketplace, get buy-in for those norms from the retrofunders, so that the retrofunders tie their retrofunding to an adherence to those norms on the side of the researchers and the investors, so that they have a strong financial incentive to adhere to good norms. And these are norms that we want to establish from the start on this marketplace. Then, on the legal side, securities law is a bit of a problem, so we want to limit our marketplace to only accredited investors, on the side of the investors, of course. And that should make it possible for people to issue their impact certificates without having to register them with the SEC, which would have been prohibitively expensive. And then we are thinking about a system where there is a nonprofit think tank intermediary that takes over the maintenance of the marketplace, so the issuing of impact certificates and whatnot, and then simply pays researchers to do the work. So pays them as contractors, for example, so that it's always this nonprofit that does the issuing on the marketplace. And that has the advantage that nonprofits enjoy an exemption from the registration requirements of publicly traded securities, and thus would be able to, thus we're able to scale down the operation of this marketplace to the scale of individual papers or even smaller contributions to our knowledge base. So what are our current bottlenecks? First of all, we're very much looking for experienced grant makers that want to potentially use our platform, so that we can learn from them what their needs are, what features they need, and how we can structure our platform to make it maximally useful for them. That would be very interesting to have. And then, of course, we are developing a platform, so we're also very interested in software developers that want to help us with that. I'm building this platform with TypeScript and React at the moment, so if those are technologies that you're interested in working with and you find the project interesting, then please get in touch. I'd be very interested in hearing from you. People who want to use this platform, there are groups such as Protocol Labs that are developing an impact market infrastructure themselves. Protocol Labs is a particularly important player in this field, and we will at some point evaluate whether we want to switch to their architecture for our marketplace. Then there's Manifold. Manifold is interested in providing prediction markets for impact certificates that can aid funders on the marketplace, and that can also help avert certain risks that are associated with impact markets. So that is why we are very interested in that collaboration. Scott Alexander is interested in using an impact market for the next Astral Codex 10 grant round, and there are various other groups that are also interested in using impact markets in some way or another. That's from our side at GoodX. Please check out our website, impactmarkets.io, our Substack, impactmarkets.substack.com, and please also consider joining our Discord to contribute to the development of impact markets. Thank you.